Hello everybody, hope you're doing well. Welcome to another episode of Monday Markets brought to you by the FTX app. Links available in the description below for all your portfolio tracking and mobile spot trading needs. Check them out if you haven't already. Always improvements on the app, and we have some more content coming around FTX soon. So first things first, it's been a while since the last Monday Markets. Don is back from holiday now, which means regular scheduling is back. Monday Markets, Wednesday live stream, Friday Casual Friday, and then the newsletter on Tuesday. So go to trletter.com if you haven't already and sign up. The first one will come out, 16 hours from now or something. So usually in the afternoon on Tuesday's UTC time. We've been away for a while, so it's worth revisiting the charts with like a fresh perspective. So structurally, in terms of the monthly time frame, we closed at or around 20k, so that's still very much the cyclical level that we're battling with. If we to zoom in on how last month's price action developed, you'll notice that it's not like a full bearish engulfing candle, but it did spike previous month's high and then close rather bearishly. So typically when that happens, if you take this inside month as a range, if you spike one side and close within it, you'd normally look for a move towards that month's or that candle's or that range's low, which would be here in the sort of 18,000s. And you can see that this current monthly, which is currently red, but again 25 days left, so not consequential, there are also lows stacked on previous month's low, not just the month before that. So there's some cleaning up to do on the lows given this kind of spike or fake out attempt, or breakout attempt I should say, that resulted in the fake out. So I've certainly got my eyes on the sort of sub 20k lows, at least for a poke, and it'll become very evident just how stacked that area is once we look on slightly lower time frames. So that's just some perspective worth bearing in mind. If we look on the weekly, we know that the market is around 20k. The specific weekly closes haven't been fantastic. I think one cluster worth paying attention to is this kind of midpoint cluster here at around 20 to 21k. You can see this is the consolidation, sort of ranged here for a bit, broke out, some support, and then you had this double engulfing close through it, and it's currently resistance. So I think on a weekly basis, should the market start to rally this week or into CPI or whatever it may be, just on, if you're observing the weekly time frame for bias, at the very least you want to see that reclaim for the chart to look somewhat more constructive. That is in the absence of some sort of poke at the lows which gets absorbed. And I think the daily time frame brings this area into focus as well. If we carve out a specific daily range using the most recent price action, what we can do is, and I think we've had this range in the past as well, go to this highest close as our resistance, this lowest close as our support, and extend it to get an idea of the mean. And lo and behold, to nobody's surprise, our weekly kind of midpoint cluster also ends up falling in that 20.7 area. And the way this range has developed thus far is that the range high breakout failed. The market closed below the range midpoint, which is now weekly and daily resistance, and the only untested area is the range low, and the market's just very much been moving sideways and stacking wicks around this 20k handle. So at least for my money, if I want to get long this instrument, it needs to be on some sort of failed breakdown attempt. So sort of, poke through these lows and show me some absorption, or a failed breakout. Failed breakdown. I guess breakout still works. Or the same can be extended, the same courtesy can be extended to the daily time frame, where you finally retest this daily range, maybe a failed breakdown there, and then some business to be done. If that doesn't happen, the only other reasonable thing I might opt to do is try to get long this weekly and daily reclaim of the range midpoint. The only issue there is, by definition, trading at the range midpoint would be diddling in the middle, which is not something I like to do, but given this is quite a big pivot, at least for kind of short to medium term trading positions, that might be something that's accessible. And really, if you look on the hourly, you can see how stacked this mini range is in, with this kind of quadruple bottom extending all the way from the end of last month. So I'm curious to see what lies below there if we're going to trade away from these higher time frame levels. So in terms of Bitcoin dollar view, I think overall, kind of structurally speaking, it's been weak. For example, this quote-unquote rally took place while equities and ETH were melting faces. Bitcoin didn't participate. It traded back within the range, and it's also below the range midpoint, right? This sort of 20.7k-ish handle. So for me to get bullish this instrument, I either need to see a breakdown that doesn't stick, be it at 19k or at the larger 18.6k range low, or potentially some sort of 20.7 reclaim. Those two signs are fine. Failed breakdown through lows, or reclaim of range midpoint. Those are the only two setups I'm interested in. I'm not terribly keen on this price action on its face, right? Hopefully that makes sense with BTC USD. I think the levels are really good and they overlap and they just make sense. And the setups I'm looking for should be logical as well. So that's Bitcoin. Let's look at ETH, because that's where a lot of the market's attention has been. And it's not just attention. If we look at data such as perpetual swaps trading volume or options open interest, or even just narratively what people seem to be caring and talking about, it's very much the merge, right? And we've seen ETH BTC go absolutely ballistic as a result. This thing just looks very strong, and it's sort of closed through its range high if you draw it like this, and it's just approaching the kind of last swing that we set at the end of last year. So ETH BTC is still looking very constructive, and again, just narratively, it's got a lot going for it, unlike Bitcoin, at least at this point in the market. So we know that ETH BTC looks quite reasonable. If we take a look, and that's being, well, it doesn't look quite reasonable. It just looks strong for the time being, right? That's pretty clear on all time frames. As Don was pointing out on another show, this is just like a very large uptrend in ETH BTC, and the specific development that we have now on kind of the monthly and the weekly, you had a failed break at the range lows, and the market is now kind of pushing into the range highs. Sure, it is a bit scary that this is happening kind of at resistance-ish and right into the merge. There is a world in which it's a sort of sell the news event and everything gets pushed. That's certainly plausible, but for the time being, let's look at what we've got. So ETH BTC looks strong. Let's look at ETH USD to see if we can get anything useful. The monthly time frame, I think, is less useful than this would be for Bitcoin dollar. It's very much the same case that ETH is sort of around or above its prior all-time high, and it never quite made the push into its higher time frame monthly levels. So I think if merge is going to be a not sell the news event, but people are underexposed into the news event, then a push towards monthly levels becomes very plausible, which is low to mid 2000s. A quick note on the whole merge thing. The merge comes out, or the merge is supposed to go live on the same date as we get more, on the same day rather, that we get US sort of CPI print and inflation data. I really think the inflation data is going to kind of guide the market, and the correlation that we have with equities will be in the driver's seat. And if it's a sort of dovish surprise, and the Fed looks to be, if the data's good and we can expect the Fed to soften its stance, then I think ETH and just risk assets will rally from that massively. If it's hawkish or even neutral, to be honest, or no change in tone, then I don't really see a big change in conditions, and it probably still looks choppy / downtrendy. So I think it's a bit of a distraction to focus just on the merge as an event. I think the reason the merge came to the forefront narratively is because the time it got popular was also the time we had that big counter trend rally in stocks, and that kind of supercharged our returns in ETH because all that crypto money was looking for a bounce because of macro, and then ETH was the best target for that bounce. And I think it's a very much similar scenario in this case, where inflation data is going to guide markets. And if ETH dumps as a result, everyone will say, oh, look, well, the merge was priced in, it was obvious. And then if ETH doesn't dump as a result, people will say, well, the merge wasn't priced in and it's just the start. But I don't think it's that much to do with the merge. It's kind of a false causality there. And for my money, at least, it's very much the larger flows macro trade that's in charge. It just so happened that during those kind of counter trend rallies or shifts in risk assets, ETH had the most compelling narrative, so the market was very concentrated on that same trade. But I think in terms of what's really in the driver's seat, it's still bigger picture risk indices, S&P, NASDAQ, and so on. So with that said, for ETH USD, monthly time frame, we've discussed that those levels are slightly higher up. On the weekly time frame, this is quite curious. So I think the nearest level of high time frame resistance has already been tested in the form of this kind of 2K cluster that we've discussed at length previously and in the newsletter. You got a bit of a pullback into it. Now, it didn't pull back to any structure that I find terribly compelling. Like, arguably, it's this 1700 level from this lowest close, but it's not my favorite level, to be frank. So if we look at it from on other time frames, as we will in a second, I mean, this is kind of after the fact support for me, and I know Don, for example, has got this cluster here as a level, but for my money, as far as higher low structures go, these aren't the best, but they could just be good enough because the market is so strong. And I think if this resistance isn't going to do anything, if you get a rally into the merge and then that ends up in a weekly close above 1900, 2000, etc., I think that will be very strong that this wasn't the top, right? And then that's when you get your monthly target fill into this 22, 23, 2400. But I think the best weekly resistance, at least in terms of what's close to us, is still 2000. And in terms of support structure, I think it's slightly less clear. If I had to cope and kind of extrapolate, I mean, my base case is that the two best ETH daily ranges are between sort of 1700 and 2000 here, and they've been really good. And then one lower between sort of 900 and 1000 here, which are also, I look, at least was clear at the time before this expansion started. For me, this midpoint kind of between those two ranges is far less compelling. If I had to kind of extrapolate levels from what we have, it'd probably be in this 1600 cluster here. And that seems to be kind of okay, but volatility's kind of really dried up. And from a market structure point of view, I'm not getting particularly clear reads from it. So I'd much rather do business back inside this range, and at that point, normal rules apply, right? Reclaim the range, target midpoint, potentially range high, etc. Right? All that normal stuff is the same as it was from our normal price action trading, and the same for the range low, right? If it closes back within the range, target the midpoint first, and then the range low potentially, and so on and so forth. But this kind of middle interim area at 1600, I just don't have the requisite levels there to develop strong views. I think it's going to be very much news driven, very much narrative driven, and as I mentioned, very much kind of macro inflation data driven, and that correlation that we've been talking about for months is still very much in play for my money. So that's ETH. I know it's a bit less useful than Bitcoin, but we know that EPTC is strong. You might be willing to trade less clear support levels just because that's where the entire market is. But at least we know that should the market push higher, we have a really good range to work with, or should the market collapse, we've also got a very clear range to work with. And I personally want to get out of here soon. Higher is fine, lower is fine. I just want the better levels, to be completely honest with you. So that's ETH. I hope that's helpful. And if any of this is nice to hear again after a long break, do leave us a like on the video to get us back into the algo. Now, S&P, I guess this is where I'm a bit of a doomer. Not really doomer, I guess I'm just selfish or greedy. I would really like the market to trade back into this kind of quarterly COVID-ish range or consolidation. You can kind of see that the post-COVID mega rally took place after this base, right? For once on the S&P, at least on the very high time frames, we had quite an extended range, and then we've sort of broken out from it. And we've started pulling back since. This looks like the half of a very naughty drawing. But in any case, you've got very clear levels on this quarterly and monthly chart of 3200s, 2900s, or 2500s. And if you look on the monthly as well, it's just very clean, right? This is the range high. It kind of got flipped before the expansion. A very meaty range midpoint or point of control, whatever you want to call it, mean. And then obviously the COVID lows as well. So I think if we have some sort of doomer scenario where there's a recession, no soft landing, Fed doesn't pivot, inflation is extra sticky, furtherance of the commodity push, whatever it may be, I'd really like to be able to do business and build a bias based off these levels, but I'm not sure whether we'll get it. And the question is, what lies in the interim? And for my answer would be that we're in an area of weekly support here. Now, we know this area in the 3900s has previous significance, like during the rally. This is kind of the last little base before the next leg of the uptrend started. But even in terms of recent price action, you have a low, you have the overshoot, and then potentially a higher low in the building here. So if you're going to have this kind of over-under structure, you need this 3900 weekly support to hold, because otherwise, if that collapses, then the lows look vulnerable at that point. So the S&P, long story short, is at support. In terms of where's resistance, it depends on the time frame. I think being conservative, if this is like unambiguous weekly support, we also have to pay attention to also quite the nearest weekly resistance, which for me is 4100. And until proven otherwise, just assume the S&P is going to be in this range on the weekly time frame between 3900 and 4100. That makes sense to me, and if that's at all credible or correct, then we are kind of in an area of weekly support. I know it's Labor Day weekend, all that type of stuff, but this is still relevant for next week or this week, whatever it may be. And I think similarly for the NASDAQ, it's in at a monthly level of support, this kind of cluster here before the upthrust. And I just want to note that this cluster has been very good from a price action perspective. So it's been on the monthly, but if you look at that, sort of bottom ticked here, perfect resistance, has now flipped to support and is currently being retested. So the levels here are very good and worth taking seriously. At face value, at least on the weekly and monthly higher time frames, the risk indices are at support, and that's been a kind of decent guide for the market thus far. So that's kind of one piece of context worth bearing in mind. I think in general, if you care about crypto at the moment, really the four charts you should be looking at is ETHUSD, ETHBTC, S&P 500, and NASDAQ 100. Right, and Bitcoin to some extent, but really the only relevancy that Bitcoin might have is if it just starts to rug and pulls down ETH with it. That would be an unfortunate scenario, but one worth kind of bearing in mind as well. And just in general, kind of zooming out in terms of trading opportunities or things I'm looking at. I was trading ETH short term in the last couple of weeks, but it really kind of slowed down. I've been less active in the past week or so. I really think you can do one of two things, or perhaps both of them. One is for these instruments, they've built up very narrow ranges over the last couple of days on the 1 hour, 4 hour, whatever it may be. Like, there's been a real compression in volatility. So trade it like you would any other range, right? Range gets very kind of stacked, and then if you have a break attempt, you kind of let it go. And if it trades to support, you do business at those lower prices. Great, you get to trade fresh levels. But if the breakdown fails, then you get to kind of play the mean reversion to the other side of the range, the reclaim, and what have you, right? And I think that applies for Bitcoin dollar, like on the daily time frame and on intraday time frames. I think it applies to ETH as well in this consolidation, and I also think it applies to all altcoins to a large extent. That's your option one, right? Kind of let this volatility resolve or attempt to resolve and play on the back of the stops of participants who got it wrong. Your second option, and this is kind of what I'm leaning towards, is to simply wait for that stacked news event. I think it's the 15th of September, maybe the 13th. I'm sure someone will correct me in the comments. But basically, just in over a week, we've got merge and inflation data. And if volatility hasn't picked up by then that will certainly be the catalyst for it. And, again, trading the sloppy execution of those who got that bet wrong is always a viable strategy, especially when we've got such clear highs and clear lows built up in the market. That's all from me. Hopefully that was helpful. Let me know in the comments. It's nice to be back. Thank you again to FTX for supporting the show. More content around that coming soon. Leave a like, subscribe, do all the YouTube stuff. See you for the newsletter tomorrow and later in the week. Take care.